Hey everyone, welcome to this exciting journey into the future of finance. A recent study by Accenture says that blockchain technology could save banks around the world $12 trillion every year by 2027. That's a huge number. Imagine the impact on the global economy. It shows how blockchain can totally change how money works. From secure transactions to transparent ledgers, the possibilities are endless. We're about to see a big change in how we handle money, where the old ways of banking are being questioned and changed. The shift is happening right before our eyes. The excitement about blockchain isn't just about cryptocurrencies anymore, it's about a new way of thinking about financial systems. Bitcoin, the first and most famous use of blockchain, made big news, but it's the technology behind it that can really change many areas like banking. It's the backbone of a new financial era. The world of money is paying attention. Investors, regulators, and everyday users are all watching closely. Big banks and financial companies everywhere are looking at blockchain to make things work better, be safer, and cost less. They're investing heavily in this technology. They're interested because blockchain can fix some of the biggest problems with how banks work now. From reducing fraud to speeding up transactions, the benefits are clear. Traditional banking has been around for a long time, but it has problems. Despite its long history and established presence, it faces numerous challenges that affect both banks and their customers. These systems aren't very safe, often falling prey to security breaches and cyber attacks. They can be hard to understand with complex statements and confusing terms that leave customers puzzled, and they don't always work very well, often leading to long wait times and frustration. Security breaches and data leaks happen a lot, and that makes people not trust banks. These incidents can lead to significant financial losses and personal data exposure. Because traditional systems are centralized, they're easy targets for hackers, which can be bad for both banks and their customers. Centralized systems create a single point of failure, making them vulnerable. Also, it's not always easy to see what's happening with your money in traditional banking. The lack of transparency can be frustrating. It can be hard to follow your transactions or know why you're being charged fees. Hidden fees and unclear charges add to the confusion. This can make it hard to trust banks and fix problems. Resolving issues often requires multiple interactions with customer service. Lastly, traditional banking can be slow and expensive, especially when sending money to other countries. International transfers can take days and incur high fees. There are many steps and people involved, which slows things down and costs more. The inefficiency of these processes is a significant drawback. Blockchain can fix these problems. It's decentralized, which means it doesn't need a central authority like a bank to handle transactions. Instead, the record of transactions is spread across many computers, making it more secure. It's also immutable, which means once something is recorded, it can't be changed or erased. This makes everything transparent and builds trust. Finally, blockchain uses smart contracts. These are like automatic agreements that do things when certain conditions are met. This cuts out the middleman and reduces mistakes. Blockchain isn't just a theory, it's real. Santander, a big international bank, is using it. In 2018, Santander started OnePay FX, a way to send money internationally using blockchain. This makes sending money across borders faster, cheaper, and easier to understand. OnePay FX cuts out the middleman, so transactions are quicker and cheaper. Customers can send money almost instantly and see exactly what the fees and exchange rates are. Santander's success with OnePay FX shows other banks how useful blockchain can be. Even though blockchain is great, there are challenges. It offers a lot of potential for secure and transparent transactions, but it's not without its hurdles. One is figuring out the rules. The regulatory landscape is complex and constantly evolving. Governments are still trying to understand blockchain and make rules for it, and this can make it hard for banks to use it. The lack of clear regulations can create uncertainty and slow down adoption. Another challenge is making blockchain bigger. Scaling the technology to handle more transactions is crucial. It works well on a small scale, but it needs to be able to handle the huge number of transactions that happen every day. This requires significant technological advancements in infrastructure. Solving these problems is important for blockchain to become common in banking. Without addressing these issues, widespread adoption will remain a challenge. Governments need to make clear rules, and tech people need to make blockchain bigger and faster. Collaboration between regulators and technologists is key to unlocking blockchain's full potential. Even with these challenges, blockchain has a bright future in banking. As the technology gets better and the rules become clearer, more banks will use it. The advantages are too big to ignore. Blockchain can make things safer, easier to understand, faster, and cheaper. It can change how we bank and handle our money. The move to a blockchain future might be slow, but it's happening. Blockchain can make banking much better, more efficient, secure, and transparent. Don't forget to like, share, and subscribe for more insights into the future of business and technology.